Hi folks, I'm Will Bridges from your team here at Trade House Funds, and we had a big week this week. We had PPI numbers come out this morning, very underwhelming, very hot CPI numbers earlier this week. So inflation for the US dollar, confusing. Same thing goes for the release of the Bitcoin ETF earlier this week. We're going to get into more of that. We're going to look at economic calendar. We're going to look at charting analysis for all those. There's also ramped up potential for war in the Red Sea. It seems to be getting uglier and uglier by the day there, but not going to get too much into the details. We're going to look at charts. We're going to look at the economic calendar, and I'm going to show you first the economic calendar. Actually, we're going to do the risk count or the risk disclaimer. And what this says in so many words is that if you put your capital into any market, then your capital is at risk. Okay, so trading does carry risk. There's no such thing as a guaranteed trade or investment. I will show you guys my account, towards the end of this session. I'll get into that, show you guys how things have been going with the information I share in here. And by all accounts, I feel like let's just say I've been a lot sharper. I only did 0.5% this week, which is, I think, enough. If I do that every week, it's something like, I want to say that compounds to 26% for the year, which is better than 9 out of 10 S&P years, but whatever. Either way, we'll get to that later. Everything here will be for educational purposes only. So do feel free to put a comment down below if you have a question about anything that I show in here. But let's go ahead and get to the economic calendar first. I'll get this thing pulled up. And big news this week to start. CPIs came out flat in the UK, which basically means that they are, not deflating there anymore, which is, relatively good news, bad news, whatever you want to call it. But there is a lot of geopolitical risk, and I think that there could be an opportunity for the Swiss franc to see some serious strength, especially if Ukraine, Russia, China, Taiwan, anything in the Red Sea, Iran versus USA, Yemen, any of that stuff heats up any more than it already has, and doesn't seem like it's cooling off anytime soon. We also have election season coming. World Economic Forum meets next week. They've got, rebuilding trust is their new theme, whatever you want to call it. But also, it does look like Japan, they haven't raised interest rates in 7 years, and they are destroying inflation there. The central bank's doing a great job doing nothing there, which is incredible. We might see more strength in the JPY, and especially after the US dollar had a very strong looking Thursday, they had a very weak looking Friday. Okay, so less investment in China happening than anticipated. There's also less producer inflation, which is a leading indicator that inflation might be coming down more. Okay, and in a hurry. So interesting that CPI still came up with the weaker PPI numbers 2 months in a row. They even revised down last month. So we've had 2 negative prints technically of PPI in a row here. So this could be a sign that they can't hold rates as long as they want to in USA. This is a sign that they're going to hold them longer than they wanted to. So it's a mixed signal on the dollar. We've got Bailey talking about how they need to make sure that they bring down inflation in the UK, and Bailey's right about that. We've got mixed signals in Australia with the high retail sales numbers, the lower than anticipated inflation, but that inflation number is still high at 4.3%. So if we look at this, the target's 2% like it is for everybody else. So they're further away from it than the USA. So main things I want to focus on right now: gold, Swiss franc, JPY. I'm going to be looking for strength in all 3 of those. Same thing goes for silver. I'm going to be looking for strength in oil. And, the commodity-based currencies, I might want to value over things like the dollar for the short term, but I don't think those are going to be the big fast movers. And that's really what we're here to look at in these videos, is the stuff that really I think is going to cook. And volatility has been huge this week. Just to show you guys, my win rate has been, in my opinion, just awful. Okay, awful. So that said, I'm still up, okay, 0.5%. And it's been, a lot of small trades. I don't have to trade big to make money. I mean, that's really what the cool part about trading a giant account is all about. If you want to make, reality is a $250 challenge. And, if if I make $250 in the first month, it's going pretty good. And I'm only a week in, I think, at this point. So it's going pretty smooth. And I think I'm excited to finish this one so I can level up and do all the other fun stuff and trade bigger accounts and do all that stuff. But not to get too far on my account here, let's go ahead and get over to the actual charts and expand this thing over. And what we're looking at here is the dollar yen. I've got it up. We might as well look at it first. I do believe this one pushes sideways in this consolidation zone, and I think this lower 140s price down here, let's go ahead and click on this guy. I think this is really where we're headed, down here to the 142.5 range, I think is probably where we are in short order. And really where I think it's headed longer term than that is down here to this 138 level. I don't see any reason why we can't get down there, especially if things continue to ramp up in the Middle East. We've got a very big double top here. I think long term this can go all the way to 184, 185. The sky's the limit. 300 has been a thing before. You just can't see it on the chart because they don't share that data in here. So I do think we come down lower here on the dollar yen, at least in the short run in the next few weeks, especially if we continue to have more and more geopolitical risk ramp up. Let's go ahead and look at gold. I think gold's going to have a similar fate, and I think gold is looking a little bit more bullish than the JPY. This is looking a lot like the Nikkei looked like before we called that breakout last week, and this is already broken out. Okay, so we're on the next step with gold versus the Nikkei, and I think the Nikkei can still come higher as well. The JP 225 is the Nikkei, for those of you guys that don't know. But gold, as the Swiss continue to keep rates high, the Swiss just make gold more expensive. And also China is really, I want to say I saw prints for 2,100 an ounce in China. So there's a disparity between the cost of gold in the East and the West. And I think that might be a big reason why there's a battle for oil right now, like we've never seen, I think, probably in the last, many years. It's been a while. Okay, it's been a while since all the no blood for oil talk was happening when I was in middle school, high school, which may not seem that long ago, but my hairline was lower. It was like down here. Like I was like all the way down. But trading will do that to you. Anyways, moving on. I do think bullish here, and I think gold can come all the way up to really the next stop on this train here is, what is this, 2175? 2170. I don't think would be crazy. I think that's $120 an ounce above, and it could go a lot higher. I'm heavy on it. Just to give you guys an idea, I am very much invested in this, and really, I'm biased. I'm not giving you advice. I'm just telling you guys, as far as from a long-term standpoint, because gold is up for the last 2,000 years. Okay, so spot price, can it come down a lot? The answer is yes. But I think long-term, gold is destined to go to 2,800, and that could happen this year. I think there's really no reason why it can't. But let's go ahead and look at silver. And silver has been one of the most depressing things to trade in a long time. And I think, let's talk about the history of silver here. Okay, so reality with silver is that back here where we had these $30 prices and all that stuff, okay, this was the breakout. Everybody expected this to be it. It was going to be silver to the moon. We're going to 51. And it didn't do that. They changed the rule. The way that it used to work, when you bought a share of this SLV ETF, for example, you buy the share, okay? They go ahead and buy a physical ounce and they send it to their trust. And once it reaches the trust, they allow a short position to be opened so that they can protect their downside risk. Okay, so you create another one right there. So I buy 1 ounce, they create another one already, and that was the old way. Okay, so buying it already created, buying 1 ounce created a second ounce, and that's how that worked. And they changed that rule when we busted the $30 mark here. And now they no longer have to wait for, you click buy, okay, they don't have to wait for delivery to happen. They can go ahead and open the short position right now. Okay, so you buy, you create an ounce paper, never get physically, doesn't technically have to get delivered to the trust ever. And then they create this other short position. So you've now created 2 and you didn't actually purchase a physical. Okay, so this has been very sideways since that happened, and it's been very difficult to watch. The physical stackers are probably excited at $23, $22, this area here. We've got a ton of price support. It would be very surprising if this doesn't break out, especially with the climate that we're living in right now. We're getting a little bit more sideways action on the dollar, and it's election season. There's so much going on right now to believe that this could go to the mid 50s and beyond. Okay, so I'm, like I said, I'm going to be bullish here, but it's going to be tapered. So, I mean, it maybe all the way up that high doesn't make sense, but 35, 33, I think is probably safer bet. That's almost a 40-50% jump if it does something like that. So huge opportunity here on silver. I don't think it's as big as people want it to be because of all the reasons I just mentioned. And gold is kind of the same boat, but I think gold is a little bit more used from a physical standpoint by major governments and institutions, more so than silver, just because, well, you can have more money in gold in a smaller space. So oil prices stay lower if they focus on gold. And a lot of consumers, people like you and me, are more interested in something like silver. But let's keep on moving. Okay, so Bitcoin was big in the news this week because, well, earlier in the week, you know, they accidentally spoofed they approved the ETF everyone's been waiting for many years. We're getting this massive weekly candle here. This is just that's an ugly one if you're bullish on Bitcoin. For that to be all the way back down to 43,771. We did get a breakout. Okay, so this is still, in an uptrend territory. We haven't broken any downtrend lines. But, like I said, it depends on what time frame you're looking at. This is the weekly chart. So if we consolidate here, wouldn't be crazy to come down here to 40,000. Okay, so 40,000's in reach, and I think a lot of people might be buying there. Obviously, the hodlers, the people are going to hold Bitcoin forever and ever, and no matter what. The anti-tyranny people that aren't trading it, the people that are investing in it, they're going to hold. And that just is how it is. But, the biggest owners of Bitcoin in the world, second largest owner of Bitcoin in the world is the U.S. government. Okay, so they may not want this price to go to $1 million. I think BlackRock might really like this 57,856 price with their ETF. Obviously, I think this has to come up for the Bitcoin ETF to look good. And I think later they change the rules like they did on silver and gold. But that's just my, conspiracy theory, tinfoil hat, but this is an uptrend until I get proven wrong and we get a downtrend break. So it is at a somewhat low price. Like I said, 40,000 is really where I would want to be the most interested in becoming a buyer. And if you come down here to this 236 level here, let's go ahead and actually type this one out. Let's get this one on there. 38,867. I think is as good a target as any if you're going to short this thing. But like I said, I am more interested in buying. Right now, it does look like we are closing out this week on a negative note on Bitcoin after this much anticipated move, this ETF. But it's been really interesting to see that the SEC can't actually keep their own Twitter account protected, but we're expected to make sure that they keep the money safe. But let's go ahead and look at the franc, the dollar Swiss. And I think this is another one that has room downstairs, and it seems like the market agrees with me. This is the weekly chart. Let's go to the month. You guys are going to get this. You guys are going to see this one quick. Okay, so obvious downtrend, and really I think the target I want is all the way down here at 75.5. Okay, that's 1,000 pips away. Maybe not that far. Okay, maybe not that far in at least the short term. Okay, that's where the extension level is from our 382, and 0.382 is the square root of 618, the golden ratio. You guys should know all these magic levels, but that's what this is printing out for me already, because I don't want to look for all these levels. I just want to know that they exist and where they are. But it does seem like we're checking this level previous here at 85.2 or so right now. So really next extension below 80.78. We could go a lot lower. Okay, so I'm in this one to win it. I think short is in order on this one, and I do think we're out of time here. I think that is all I wanted to cover today. We've got lots going on in the world. We've got the World Economic Forum meeting next week. We've obviously got a ton of action in crypto. Has been moving a ton. Oil has been moving a ton. If we're looking for more traders at Trade House Funds, and if you're the type of person that can trade a 5 or 6 figure account responsibly and trade it small, then we want you in a challenge. Okay, just like they want me in one. Okay, so all of these things said, if you want to trade at a professional level, we're here to solve that problem. If you want to make $1,000 in a month, for example, then if you have 10 grand, you need to make a 10% return in that month to make a 10% to make that $1,000. Okay, so or you could open an account with us, $250, whatever, $300 for a $25,000 account is the low end. Okay, and then a 1% gain in that account in $25,000. You guys following this yet? It's pretty. It's a much larger advantage. You got to have money to make money, and that's why we exist. I hope that I can get that point across. If you guys have questions, ask me in the comments. If you have questions about anything that we showed here today, you want to see more of a particular symbol, ask in the comments. I send out newsletters every week as well, so you can join that for free on our website. Thank you guys for staying this whole time. If you haven't already, like the video, subscribe, do all those things. Thank you for joining. Again, I'm Will Bridges from your team at THF. Have a great weekend. Be good or be good at it. Take care, folks.